तेजी में इतना लूट लो कि मंदी से फर्क ना पड़े. Okay, so for a person like me, it is तेजी में इतना लूट लो कि मंदी से फर्क ना पड़े.
A very good afternoon to all of you. Welcome to the 13th Mission Smile Investing Karwa. I am Ankit Kanodia from SmartSync Services. And just like every month, we have one stalwart with us with whom we can have a seamless discussion. And I would request all of you to please keep on sharing your doubts, your questions on the chat box. After our discussion, we'll take up as many questions as possible, depending upon the time permits, right? And I know Nooresh Merani ji is a well-known name in the investing community. He doesn't need any introduction, but for the sake of recording, and since we'll record the video and it will be available on our YouTube channel as well, I just share a brief introduction. Probably Nooresh ji is in the market for over 2 decades now, and he has been very active on his blog. And in fact, if you can just look at his blog, he has documented some of the very, very, very good learning, which he has, and you can see his journey, how he started and how he has done, everything is documented. And that is what makes it very easy. And it is so good for the community that any newcomer can just go to his blog and just read those articles which he has written and can learn a lot through it. And I, being a fundamental investor at heart, and being probably zero at technicals, I think I'll be one of the biggest gainer today, because I'll be asking all the stupid questions and hope Nooresh ji will help us with their answers. So with this, I'll start. Nooresh ji, first we would like to just have your background as to how you started in the investing community. What led to, if you can just give us a little more background as to what you were doing earlier and how it came, how you come to the stock market. We'll start from there and then we'll take it up from there.
Yeah, so let's keep it to Nooresh instead of Nooresh ji. I started off out of sheer coincidence. This is back in 2004, in May 2004. And basically, I'm an engineer by qualification. And when engineers have a vacation, everyone does not. So I had nothing to do, and that was the time my mama was turning full-time into markets, Mr. N.S. Fidai. So I just went to him and said, now teach me about what is Sensex, because I had nothing to do. And that's how the whole journey started. So he mentored me all through that period. And luckily, during engineering, you get enough time also. The incidents which actually is very vivid in my mind is, this was somewhere in May starting when I joined him. And I remember him and his friend discussing, BJP है या कांग्रेस है, मार्केट गिरेगा. And cut to 17th May 2004, Black Monday, you actually see a lower circuit. So that's my introduction into the markets, and that is where the curiosity started. There is something which can be analyzed, and that's how the journey started. Made all the mistakes over the next 1 year, 1.5 years, and then slowly learned what not to do. So there was a long period of time where in that 1.5 year period, we made all the mistakes which were possible. And that's how we started. And I passed out of engineering in 2006, went into an IT job for 6 months, but I was writing a blog back in 2004. It started off writing on Orkut communities. I don't know how many people were there. From Orkut community, somebody suggested write a blog. So that's how Blogspot started. Then a few years later, it became Drupal, then it became WordPress. So technology kept on coming and we kept on evolving. And that's how the journey started. So from Orkut, we went to a blog, and me and Mama started Analyze India back in 2006. And that's how the journey started. So it was all out of coincidence. And luckily, it was a great time for the markets. So I got full time in January 2007. So in 2 years, I saw the best bull market as well as the worst, best bear market as well.
Great. Thank you so much, Nooresh. So first of all, I would like to know why technicals, why not fundamentals? Or was it just an accident, or you figured out that no, you checked out fundamentals also technicals, and then finally thought that no, technical is what for me?
So see, I had no clue about the markets in 2004 when I was a 20-year-old. went to Mama. He was already an investor, active investor back in the 90s. And he knew fundamentals, and then he started on technicals around that time. And that is where I started learning on technicals and continued to be a main technical analyst, not looking at fundamentals up till 2008. And it was a blessing because on the way down, sold everything in May, June and survived. And it is only in October to March 2009 when I realized, okay, what is fundamentals? And because all the companies where I made multi-baggers back in 2005 to 7, 8 out of 10 companies were delisted over the next few years. So I remember making a multi-bagger in GTL Infra. There was a multi-bagger in RNRL, for example. There was a core project which is not listed. So there were many such companies which went kaput, and that is the time we realized, okay, what is fundamentals? And in 2009 is the journey where I started meeting a lot of fundamental investors, hardcore investors. Luckily met a lot of them in 2009. So this is back in Feb 2009, where we had a small meet of Google group called Investment Super Growth. That is where I met Sunil Shah, Vinod Ori, Kukuji. Then over the years, Neeraj Marathe. In the next annual meetings from 2009-10, Gaurav Sood, Ayush Mittal. So that's the time I started meeting investors and learning from them. And over the years, the last, say 13, 14 years, I've been meeting investors, those who are actually hardcore deep value investors and actually do work. And I've seen them make those investments. And that's the reason I've been looking at fundamentals also for the last 12 to 14 years. So today, the function is to combine technicals and fundamentals. So that's the case where it started. And luckily, I was at the right place at the right time to meet a lot of people. And 2010 to 2013 was an amazing period because markets were not doing well from 2011 to 13. So all of them had a lot of time. I remember spending a lot of time. So learning from Kukuji, Vinod Ori. There are so many people. I met Bhavesh Bhai somewhere in 2015. And over the last 12, 14 years, I've met a lot of investors, those who are deep value. There's Jitu Bhai from Pune. So there are maybe at least 20 to 50 names. And the best part about investing is you go to a senior investor, he'll pay for your coffee, he'll give you 2 to 4 hours and teach you everything of his 20, 30 years of wisdom. So that's how the next journey started. So today I look at technicals, which is my core. And my simplest strategy is basically, say if I meet you today, you understand this 3-4 companies. So I know this is the list you have, this is the list XYZ investor has, and buy them on technical breakouts. So my risk of the downside is limited because the companies you guys have deep researched will not see a big drawdown, and you're not looking for a 20% pop. So my upside is open. So that's how it's playing on.
Great, great. So you're in a way mixing technical and fundamental in a way, right? So nowadays we have plethora of courses available on the internet. Even there are so many people, including yourself, who can help people understand how to do technical. I just wanted you to take through your process of learning from the early days, how you started, whether it was books or internet, and how you blend that theoretical knowledge with your practice and how it helped you in the early days, not now. How you started on
when we started in 2004, all the resources were only available online. So I remember we had an MTNL dial-up connection, so it would take time to just download an ebook. And so the only book I read was on technical analysis. I think it was written by Mayur Shah in Capital Markets. And apart from that, luckily I had my mentor NS Vidai, so he taught me all the things. And apart from that, you would keep learning. So that was the period, and that was the time where you did not have access to, say, softwares also, right? So the data was expensive for a newbie. So I remember we used to do a Fox program, MS-DOS program to run the data for Metastock. We used to actually fill the data if there was no internet. So those were the days. And luckily today, because there is availability of data, availability of all resources, people think they can learn much more easily. But the fact is, you go through a period of trial and error, finding yourself, your journey, what suits your temperament. And that is the bigger thing. So see, I can teach you technicals, but I cannot change your character. I cannot change your personality. So somebody who does not have even a little bit of patience cannot be a long-term investor, right? And if somebody has too much patience, he cannot be a swing trader. So that's the thing which you learn. Today, the resources are available. One needs to give time. So there are so many books. The only problem reading with books is they were written back 50 years back, right? So all the principles which mattered, say a very simple principle which is there, wait for 3 days closing prices. Back in the day, because there was not enough liquidity and you could not trust prices, you could wait for 3 days for normalizing the prices. Today, within a 3 millisecond, you'll have a bull deal happen, many things happen. So you don't wait for 3 days closing prices anymore. You might take it in the day itself or on the end of day closing prices. So that's the difference. People used to use 200-day moving average before because there used to be 200 days in a year, right? So if you ask the simplest question to a technical analyst, why 200-day moving average and not 240 days? Somebody who just read the books and not understood the core concept will not be able to answer it. Today, if you have a job, you're working Monday to Fridays, you are working 240 days a year. You go to the exchange, you'll see every year 245 days. Then why are you using the 200-day moving average? Because back in the day, there used to be 200 trading days in a year, right? Even today, we have 200 days only in the judicial system in India, where there is a Holi break also and a Diwali break also. Apart from that, everyone works for 240 days.
So if I got you correct, Nooresh, you would say in today's scenario, 240-day moving average would be much better than 200 days.
So in the end, moving averages is a concept where it tells you, say, all the bad things happen below 200-day moving average, all the good things. The simplest way is you're looking at it as not an exact price, but the point is if you understand the concept, you know, okay, this is not something where it has to hold. It is not a support or a resistance level. It's an indication where the trend is. So if you look at the 200-day, it is just sloping downwards. It implies the stock is in a downtrend, right? So it's a simple concept. You understand the concept. So today what happens is people just take literal meanings, right? So you cannot take Warren Buffett's words, never lose money. Everyone loses money, right? Even he has lost money in various positions. This is not a case that he's been 100% right. But if you take it literally, you're going wrong. Right. So in the same way in technicals, people take it literally without understanding the core concept. Right. Never lose money is to get margin of safety. In the same way out here, you have a stop loss to save yourself. It is just to save yourself from a time in 2008 or 2020. So you keep paying those stop losses to save yourself. So the difference is you can read various things. You can be taught by various traders, investors, but you need to understand the concept and a trial and error. Biggest thing is what not to do, right? There are 200 indicators. You don't need to understand any of them. But when you understand the concept, that is where you confirm, okay, I don't need them.
Right. So if I understood you correctly, it's just like what was written in security analysis, say many decades ago about margin of safety, where Benjamin Graham used book value. But today, probably price to book value for most companies would not be a good indicator because the world has evolved and that is how investors have to evolve. Similarly, what you are saying is for traders as well.
So let me get to that point of Benjamin Graham. See, the problem is the book was written in the 1930s. Now, that is where 1929 economic depression happened. And up till 1934, as a company, you were not forced or you were not compelled to give out quarterly numbers or annual numbers or volume numbers. It is only after the correction, 1934, SEC comes into place, which comes out with a rule, say you have to declare quarterly results. So if there is no P&L number, what is the number you have? You have the number of the balance sheet, which is there. You have the number of the assets, which is there. So you can only calculate net asset value. You could not calculate P&L because it was not available to you. Half of the companies, so there's a Stanford paper talking about it, half of the companies would not give annual numbers also. 1/3 of them would not give annual numbers. So you did not have the data. And post the depression, you only had solace in the fact there is some liquidity value left. Right. So that is how fundamentals has also evolved. So like I said, literally, if you go to calculate net asset value, there would be no Buffett who came later. Then it was Phil Fisher who came in and said, you have to look at much longer term, right? And today's world, you have somebody looking at spatial situations, cyclicals, etc. So there is evolution. Same thing happens in technicals. So that's the fact. When you go older and understand the concepts, you realize, okay, what not to do and why not to do.
Right. So what would be your advice to anyone who is going to start from clean slate today? And if you have to advise him or maybe mentor him about trading, how would you go about? If you can explain in detail, there is no dearth of time. You can take as much time as possible, but try to explain in detail, because many in the participants are new investors or traders who have just joined in the last 2-3 years. I think that would be really helpful for us.
So the first thing which I'll say is blasphemy in terms of trading. The fact is not everyone needs to be a trader. Now, if you're starting young, right, you can compound earnings faster than you can compound capital because you don't have capital. So that's the first part. Most of the people today, I get messages from a 20-year-old, 18-year-old, I want to become a trader. I said, you want to become a trader, who's going to give you capital? Right? Are you inheriting 100 crores so that you can try and error, lose 20 crores? Like in Gujarati, we say, lakh nu bar kar se to samajh se, right? So if you do not have that capacity to lose, you cannot learn, right? So first build the capacity to lose by making money in various situations, which is either a job or a profession or a business. Build your capital and keep learning on the sides. And learning could start from learning technicals, reading the basic books on investing. So there are so many books. There are books written in an Indian context also today, right? Where you can look at say there is a book called Masterclass with Super Investors, right? Which talks about investors. You want to know about history, there's a Bulls, Bears and Other Beasts. So there are so many books. There are so many people writing blogs. There is Hugh has 30 videos, right? There are other 10 such bloggers on technicals as well as on fundamentals. So build, learn, keep doing trial and error, but it takes time for a trader or an investor to build up the temperament for it. See, learning resources are available. So the biggest problem which was there 20 years back or 30 years back, there was no availability, right? Say back in the day, to meet an investor also was difficult. Meet a trader also was difficult. Today, there are so many traders who are active on various social media. And you'll be surprised, you just need to send a message and you'll be able to meet many of them. So the first fact is learn from the books, learn from the people who are available, meet other people, those who are doing the same thing, right? Say today, if you're going for a course like CFA, there are so many other people, your peers who are doing CFA level 1, 2, 3, you'll meet them, right? You're doing a CMT, you have so many others. So the fact is, first is books will give you the base, what it means. Meeting other investors will give you what is there in terms of practicality. And the third is you actually doing it and understanding whether it fits me. But I tell everyone, the return on time invested is not great if you do not have capital. See, everyone is undercapitalized, whether you're a trader or an investor, right? So capital will not come from the sky. You may get the best strategy in place, you'll be the best trader, but the capital is going to be a limitation all the time. So learn from these three places, build capital, and once capital is built, you have the capacity to lose. You can do trial and error and then you'll learn. So the first part which was there, access to information, is gone. There are so many books available. You can get pirated books, so you're not even paying a penny, right? There are so many blogs. There are so many courses which are available, which are cheap. So the first, say, obstacle is over. The second is meeting. Because of social media, that is also over, right? Third is your peers. Again, because of, say, a WhatsApp, you just send a message, you meet people, you can talk. So obstacles are over. And that is where the problem is. We don't put effort. Because it is easily available, people don't put the effort. So take these 3 steps and give it time. When you're starting, and it does not mean you're starting at 20, 30, 40, you can start at 60 also. It doesn't matter because lifespans have increased. So the building capital and capacity to lose needs to be done first. And learning can continue on the side.
That was fantastic, Nooresh. So, and you touched upon one of my favorite topics. So I'll just expand a little on that, and because that will lead to my next follow-up question. So I completely agree with you on this. And many people, when they look at that compounding equation, so that A is equals to P into R to the power T. So R to सबसे ज़्यादा famous है. Everybody is looking for how you can multiply. So सबको मल्टीबैगर चाहिए, आज लिया 6 months में डबल ट्रिपल हो जाना चाहिए. Then there are people who will focus on T, which is how much time you can spend in the market. But what you touched upon is very close to my heart. Very few people look at the P, which is the capital, initial capital. And most newcomers, be it investor or trader, that is where they lose their focus. They don't understand that this capital is the first, and I'm really happy that you touched upon that point. And I would now like you to answer this question as to how did you build your initial capital when you started? Because right now we have so many opportunities in the market to build capital. You can do training courses. You started your training courses back in era where these were not very easily, or people were not looking for these courses at that time. So how did you start and build your capital, initial capital?
So I did not have any capital to start with because I come from a background. My dad is a banker, mom is a homemaker. So I did not have enough capital. The only thing which I had was mental capital. So that could be traded. So started trading, lost a lot of money in the first 1.5 years, then recovered it. And in 2006, when I got into the IT job, I used to actually write a blog because I was on the bench. So I had a lot of time. So I used to write. So that is where Mama was also into, we were doing the same thing together. He was doing sub-broking also as well. So the fact was very clear. There was no way to get your own capital. So you trade your mental capital to get capital, which is why I was selling services. So when I quit, I had already accumulated some capital to take care of 6 to 12 months of expenses. So that is when I quit in January 2007. And that is the time we started selling research services, plus doing training courses. And that is how the capital kept on building up. And whatever was made was getting back into the markets. So back in the day, we used to do a training course. It used to be priced, whatever it is priced in 2007, it is still priced the same in 2023. So that has been the inflation. There has been no inflation in the cost of services because it's a profession which I keep doing. So that is how the capital was built, by selling services, which is where you had your research, you sold it, people paid you for it. And that is how capital got built over the years. Then I've done a lot of consulting roles. I keep doing consulting roles because the fact is, even today, if you have enough capital, right, you make money, you need to pay taxes, right? You have a family, you have to run the family. So you have to pull money out of the capital. So the reason I do multiple stuff is so that I don't need to remove anything from my capital, rather keep being able to have cash flows to put more capital or to pay taxes or do various things. So that is where the fact is, people think you want to be a full-time trader, right? You want to be a full-time trader, consider you'll make 20% per annum, right? And you want to make 12 lakhs per annum, right? So you need at least 60 lakhs of capital, right? But the fact is, 3 years later, you need a raise, right? Everyone in any industry wants a 20% raise, 40% raise, bonus, etc. How do you change that? Because that 12 lakhs is going for your expenses, right? I'm assuming that you're a good trader. You've got your strategy right. Now what do you do? अब 3 साल बाद raise चाहिए, कहां से मिलेगा? You cannot change the R, right? Rather, the R can become a drawdown in a difficult market. What do you do in that period, right? So what do you need? You need cash flows. So the fact is, you need at least 10x the capital just to be staying at the same place without raises, right? So your biggest problem all the time is undercapitalization. So same way, if you're an investor, you have to be 30 to 50x, saying 2 to 3% dividend yield आ जाएगा, right? अब उतना लाने के बाद भी आपको रेस चाहिए. अगर it's a period of 2011 to 13 where you are not making money, right? Or even if not great money as an investor or even as a trader, it was a difficult time because markets were sideways. So what do? You'll have to pull money out of your capital. Then you're setting back yourself by another 2 years. So that is why I said compounding earnings is much more easier than compounding capital, because you have to put more capital to change the actual end result. Because you cannot change R. R is not in your control. The returns are not in your control all the time. So that is how the capital building goes. Then you have to have cash flows. The reason the worst institution in India does really well is an insurance company in returns, because they have consistent cash flows coming, right? And that is the core of all long-term investors also. The instrument which they have made is where cash flow keeps coming, right? See, in March 2020, it was funny, right? Everyone who's been there before have seen a 20 to 40% drawdown. Now you get a new set of investors. He has fresh capital. Now he's put all his 100% capital. So how will somebody who's already on drawdown have no cash flows? How will he deploy? He'll have 10% cash, 20% cash. How will you beat the returns of a guy who's come in at 100% and put all the money in March to June 2020? Right? So people forget capital plus cash flows are also important. Right? Unless you have way higher capital, so you have 100x of your expenses as capital, then you don't need to worry about all these things. But I've realized majority of the people have capital, capacity to lose, and risk cannot come naturally, right? Say you are buying a 5% allocation in a trade, you're buying 10% allocation, you're putting 10 lakh rupees. Now suddenly you have to put 1 crore rupees in a single stock. Your brain may not function on, right? You're doing 2 lots, suddenly you're supposed to do 20 lots because now you have capital, right? Which you're ready to risk become. You will be thinking in absolute terms and losing your head. Okay, boss, itna loss ho gaya, itna profit ho gaya. You'll not be able to digest either of it.
That's a very, very, very sane and practical advice. So I'll just go deeper into that answer which you mentioned. So was there any situation early in the years where you were having any problem in terms of the cash flows or earnings, which mentally disturbed you in your trading style? Because that is the problem, right? Most of the people have that कि पैसा ही नहीं है और जो है उसको भी लगा दिया है, and उसके बाद उससे भी return कभी, when you have a, like in your case, you must have had a very difficult years between 2011 and 13, right? So how was it and how you cope with it?
So I went 3-4 terrible drawdowns. So start off with was 2004 to 2005, which is where I was learning. So the first thing was you were short in the markets, expecting a retest of the May 2004 lows. So the first there was a dip, then it was a runaway rally. So learned it in 2005. So first was, so I had a drawdown and a payable before starting to make money. Luckily, the absolute value was small, but the fact is you're in debt, right? So that was 2005-06. Then 2008 happened. So 2007, I was doing superb. There was this particular case, we were doing a session in Delhi. So one of the participants was on the board of a company. And he said, we are doing a handshake deal. We are going to place the stock at 120 rupees. The stock was at 70 rupees, right? So like, boss, the board member is telling, and you know his position, right? And you're like, you get influenced. You've had a super last 6 months. And suddenly that single stock in derivative position is 100% of my derivative portfolio, right? And then you learn what is a stop loss. So the stock is at 70. It closes at 58. The last major swing low is at 58. So you say, boss, okay, I'll sell it on Monday. Saturday, Sunday, we are doing a session in Bangalore. Monday happens. The stock opens at 44 because it was a FNO stock. It opens at 44, closes at 30, right? 30 to 34. So you see a 40% drawdown where you could not sell. So if you think a 10% stop loss is executable, suddenly you realize the executable kuch nahi hota hai, right? And on that day, I remember I could sell all my micro caps, all my small caps, all my mid caps and large caps, but this stock was down 40%, which I could not sell. So the whole thing was getting influenced by someone thinking. And the fact is, this is where 2008 happened. A couple of IPOs I remember got shelved just because 2008 happened. It was not in their control. The company had vendors and suppliers to pay, and suddenly they're screwed. Nothing of their doing. The business was doing okay. So 2008 was a big drawdown. 2013, I was leveraged in July, August 2013. Had to square positions right at the bottom just to survive. So that the concept is very simple. You should have some capital left as a trader, because no capital. So my mama says, no capital markets, right? So if you have lost it all, how do you get in again? So I had to cut position. So that was a terrible time. And I was just married a year back, right? So that was a difficult time. So 2013 made me realize what is the worst can happen. And then 2014 onwards. So, and by the time 2014 happened, I'd seen 2 huge drawdowns. One I had survived in 2008. One I had got a big hit. But 2008 was difficult because October to March 2009, there was nothing to do, right? There is no market opportunity. There is no revenues from services. Because how do you charge somebody when you can't make money from the markets because there's no opportunity left? because the whole fall is also over. And back in 2008, if you gave a short recommendation, nobody would trade it because you came from a 4-year period where you shorted, you lost your pants. Right? You short a stock at 400, goes to 4,000 rupees. Right? Because upside is anything. So 2008, you could not go short because you had such a huge period wherein clients had only made money going on long. So you had nothing to do in October, March 2008. I actually enrolled for financial planning course, CFP. Then luckily 2009 happened. So my date was 1st May and we had already seen a rally. And by the time it came, I got enrolled. There was an upper circuit. So again, that got off. 2006, I was, the first thing I bought when I quit was a CFA, the Schwezer notes. Never did CFA, but the point is every time there's a bottom, you think, okay, boss, kya kar raha? Right? Now, how do you spend your time? You better learn something. So 2013 was bad. So post 2014, I realized, okay, I can digest this. So since then, I'm always leveraged. So the joke is, you are so bearish that you're not leveraged. So my default case is to be levered all the time. Right? So if my leverage goes down, means I'm bearish. And over the years, one thing I learned from my mentor, Kukuji, you said, whenever you have a great time in the markets, pull the money out. It should either go into buying a house, buying a business, buying bonds, where it cannot come back easily, right? Because after a bull market, either you will make a mistake or the market will make a mistake, right? See, 2018 happens. The LTCG came out of nowhere, right? Small caps got clobbered, right? 2020, there was absolutely no way you could have said COVID is coming, right? So things will happen where you will go wrong, you will get influenced by something, you will make a mistake like 2008, or the market will make a mistake or something else happens which is not there in your control. So since then, I've learned only, so I lived on rent from 2007 to 2017, bought a flat where I stay in 2017 end. Right. Last I did a real estate investment also in September 2021. So whenever I have a great period of time, the next thing is going forward, it will be bonds because my real estate requirement is done. So the point is whenever you have a great time, remove money and pull out. See, because my default case is I'm leveraged and I'm used to seeing a 40-50% drawdown and live normally through it. 24th March 2020, everyone has seen a drawdown. We've written a huge article saying it's never equity, never been so bad. Everything is priced for extension, right? So you're down 40% and then you have the capacity to write a long form article explaining that it is equivalent to 2008 without a bull market prior. And you, if you have money, you have to put in, right? Now, how many people will have the capacity to think after a 30-40% drawdown? Right? Because you've seen it multiple times, you can digest it. So I say leverage is not for people when you start. You can do concentration at start, but not leverage. So you have a small capital, you take 3 trades at a time, 30% each, lose 5% on a trade. You can do that. As an investor, take 4 positions, 25% each. One of them works. You have a 5 lakh rupee portfolio to start with, or a 10 lakh rupee portfolio, a 2.5 lakh investment can be a 5x, and suddenly your capital has more than doubled, right? In a minimum case, if all the other 3 are losers. So as a starting guy, you can concentrate, but leverage can come after you've seen a cycle or two, because leverage can just block your brains out because you can't think, you'll go numb. All right. So I say concentration when you start is fine. At the start, you cannot be diversified. Diversification is to protect, but you have nothing to protect, boss. So I see you are starting up, you have a 5 lakh rupee capital, your salary is 6 to 12 lakhs. You are just going to lose 1 year if you lose full capital. So what's this theoretical sense of going diversified? Boss, kya ukhad loge? The 5 lakhs is not going to change you. Concentration, you may get lucky. And because you are concentrated, you'll keep thinking on position sizing as a trader, right? कि मुझे कितना माल लेना चाहिए, and you'll be working hard on the trade itself. Is there a logic to trade? As an investor, you'll actually be reading the company, because if you put 5 lakhs, 2 ही stock लिए, तो डर तो लगेगा. डर लगेगा तो आदमी पढ़ेगा या तो कुछ नहीं करेगा. There are two things only happen. You go numb or you study more. Right? There is a final exam. या तो फटती है तो पढ़ते हैं या तो नहीं पढ़ते हैं. Right? There are only two things which can happen in that stage. So I say in the start, concentration. After a cycle or two, then you can go leveraged. Now leverage could be 20% leverage, can be 2x leverage, can be 3x leverage. It's your learning which will happen with time. But I say this, blasphemy is basically, boss, I say you start with concentration. Which people say, hey, diversification, etc. I said, boss, when you have nothing to lose, right? You have only thing to learn and you cannot learn without concentration. With paper trading, you can't learn because there's no emotion involved. So if somebody comes for a course, I say buy 100 shares. Buy, say, a movie ticket loss, you lose 1,000 rupees. Say 10x of it, put 10,000 rupees. Right? Because moment you take a trade, then the emotions come. Paper has no emotion. Right? So if you paper trade, you'll do all the right things. Stock becomes 100 from 120. You'll say, I can hold. The trend is still up. But when it's in your account, like, Arey, boss, I need to cut some profits off. I cannot ride this trend. Right? All the emotions come into play. Even if that number is not going to change your capital, but you see 20%, 20,000 rupees, 2 lakh rupees, 20 lakh rupees for every different number. So I say, start, dip in, don't do paper trading. Even in investors, people take a 1% allocation. I'm like, you have a large capital, you take a 1% allocation, understood. You're taking a tracking position. Right? Think 10 by 10. Think 5 by 25 by 4. Right? So start with concentration, which is very odd. People were not ready to understand this. When your capital is small, right? The only capital you have, mental capital. So mental capital will happen when you have concentration, then you will go and read, right? So if you have only 5 stocks, you have a 5 lakh portfolio starting off, you are anyways doing trial and error. You have only 5 stocks. So you're looking at position sizing, you're looking at triggers in the stock, chart mein breakout hua hai ya nahi hua hai, volumes hua hai ke nahi, right? If you have a very small position, it will be market chal raha hai, to I'm trading, market gir raha hai, to I'm out. So not serious. So start with concentration.
Fantastic. So I just have another follow-up to that answer which you gave right now. Is that when did you start leveraging then? And how, as you said that when I'm bearish, I will not be leveraged. And as you mentioned that on 24th of March, you wrote that. So I'm assuming you were highly leveraged at that time as well.
So I've been leveraged all through, right from the time I started, because I tried it. The first thing I traded was futures and options in 2004. So I've always been leveraged all through my, say, 19 years. The leverage level keeps on increasing. Say in 2020, I took a loan even from my father-in-law to invest in March end to April first week. So the fact is, that is my style. I'm comfortable. All right. I can have a leverage position and have breakfast at 10:30 with my wife in a cafe. Right now, most people. So I have my teammate Ankit. He cannot leave the screen. Right. So he does not take a flight during market hours. Right. Because he's a lever trader, he's a derivative trader. Right. So it depends what is your temperament. Right. So I can do that because that is how my temperament is. Okay, I've done this and I'm ready to digest if something untoward happens. My position sizing, okay, the stock, something happens, there's a FD alert on my stock, it goes down 20%. Okay, this could happen. But there is also a case where you could get lucky, right? Because you're riding trends, you're okay. You will get unlucky and you'll get lucky also. So the fact is I'm always leveraged. And this is a personal thing. So when I recommend clients, I don't recommend leverage, right? Because they may not have the same capacity to lose, capacity to be sane after leverage also, right? So that's the thing. So that is my personal style and it has evolved over a period of time. And the point is I'm concentrated as well as leveraged. So that is the worst thing you can happen, right? So my personal portfolio is concentrated as well as leveraged, right? But the fact is I have a lot of, so I will not get flirted with a 30% drawdown or a 50% drawdown on the whole capital also. But the fact is on the way up, I'll be riding positions. So I can write a derivative position rolling over for 6 to 12 months, even when it is up 60%. Then only can you see the downside. See, if you're not increasing the upside, there's no point taking the downside for it, right? You want to be 1:2, 1:3 everywhere, even if you're concentrated, diversified, whatever. You cannot just be taking risk on the books and not taking the riding on the book. Right. So the fact is, this is my personal style. But for a normal individual, start concentrated. As capital builds, concentration can reduce. Or even if you have a lot of these things, right, you will understand. Right. So now the fact is, for example, then you understand yourself also. So I have a bullish bias. Right. So I'm known to be a bullish bias. Right. So even today in 2021 to 22, my view was the markets will go sideways. But the fact is, if I can spot sectoral opportunities, right, till the time I don't see a 2007 happening or a 2012-13 happening, or say going into demon, there was everything, there was US elections, I will not go on cash. But shorting requires a different temperament, right? What I've realized over the years, that is not my temperament. Because even if I get the short trade right, my temperament does not allow it to size to that level, right? So I'll be mentally very happy, but my account will not be happy with the short trade because my size will be X, my long trade would be 5X, right? So what do? You understand this is your time. Okay, this is the first power play. This is a bull market. So I was saying, तेजी में इतना लूट लो कि मंदी से फर्क ना पड़े. Okay, so for a person like me, it is तेजी में इतना लूट लो कि मंदी से फर्क ना पड़े. Stay away, right? So I remember, so in that period, say when I went on high cash, getting into demon, the Nifty is making lower tops. The BSE small cap is making higher tops. So this is my criteria of कि तो कुछ तो लोचा है, right? The Kachra index cannot make new highs when everything is going down. And you have US elections, and then you are breaking that 8600 ka low. So after going on cash, because I have a bullish bias, so I used to reach office at 12 o'clock. I used to not go to office only for those 2 weeks, right? Because I'll go, I like something, I'll end up buying maybe, right? So you have to find your hacks. Because everyone has behavioral traits, सब में कुछ ना कुछ सनक है, सब में कुछ ना कुछ problem है, right? So I meet an investor, he says, I like a company so much that I keep allocating more, right? ले तो लिया, बेचूंगा किसको? Now this is a full-time investor who's buying small caps. 2% ले तो लिया equity का, बेचूंगा किसको? So it has to play out. So I have to wait for my thesis to play out and then add. Because your entry is in your control, exit is not what the market gives you. You'll have to put it down 30%, 20% to dump your shares, right? So find your understanding, what works for you, what does not work for you, right? So I know some investors and traders are always on 10% cash because they think if there is a new opportunity, my mind cannot allow me to sell something and buy something. So I keep always one part of it cash so that a new opportunity comes, I can deploy first and then think, right? Because the biggest problem is what? Say you have a 10 stock portfolio, right? You're 10 invested. Now you see a great chart. Then you see, okay, this is in defense, right? यार इसको order नहीं आया अभी तक, तो इसको लेना है. अब what is the stock which you remove, right? So for me, the hack is what? I'll lever and take it and then think what to remove. Somebody says, I cannot leverage. So he keeps 10% cash. So I'll buy this 10% allocation and then think whether a few days later, do I need to go back to 100 to 90? So you have to find your way, okay, what fits your temperament. I'll say, abhi le leta hu, baad mein sochenge, bechna kya hai. Right. So that is a very simple example.
Right. So I think we have very beautifully covered the psychological and the behavioral part. So now I'll move towards the technical part of technicals, right? So what are the few key indicators you use? First, I'll ask two questions together because I think you would be better answering them together. So my first question is, what are the few key technical indicators you look for when you are looking for your own portfolio? That is one. Second is, how do you look at time intervals? So do you trade for a short period? Because I'm assuming there will be trades which you will be taking for a very short period, for some medium term, and some stocks might be, even though you are using charts, but you might be taking a very long-term view on those stocks. So how do you manage these things? If you can throw some light here.
So a very simple way, which is step by step. So this is a checklist. So the first thing is you have money, which is going into trade or investment, right? So the first thing comes, what is your market view, right? Is this a bullish trend, a sideways trend, or a bear market? All right. So how do you know on technical terms, if it is making higher tops and higher bottoms, it's an uptrend, right? So for example, right now, what are we doing? We started from the bottom of 16,800, 17,400, dipped a little, 17,800, dipped a little, 18,600, dipped a little, 19,500. So we're making higher tops and higher bottoms. So your first view is the uptrend is there. The second view is it topping out, right? So I have this classical, say, divergence method, which I've been doing for the longest time. There are multiple YouTube videos I've made on it, which is basically looking at the BSE small cap index, which is the Kachra index of India, because it always represents the bottom 15% of the market cap, right? See, all indices are what? Dow 30, Sensex 30, Nifty 50, Nifty small cap 100. BSE small cap has no limits on the number of stocks. So there could be 860 stocks at a time. I think today there are 860 stocks. There could be 600 stocks, but it has to be the bottom 15%. So basically you do well, you get out of the index, right? So it will always represent what? The Kachra. When I say Kachra, smallest of the companies. So the smallest company would be a 40 crore market cap, right? So when good things are happening in the market, this index does really well. So the concept is, the next part is, when do you think the trend is coming to a curve? When your Nifty is making lower tops, but the BSE small cap is making higher tops, right? So you go back to say 2017, Nifty is struggling at 11,000, right? But BSE small cap is going crazy. You go to 2016, before Demon, we have gone from 9,000 to 8,600. But in that period of 3 weeks, BSE small cap is making new 52-week highs, higher top, higher bottom. ये ऐसा है और ये ऐसा है. और पूरी दुनिया को पता है यूएस इलेक्शन है. डीमॉन तो पता ही नहीं था, right? It was out of syllabus. पता है. So then you say, okay, now my first view doesn't matter. Second view is, boss, this is going off. See, right now we are not off because everything is making higher tops and higher bottoms. But if today we go from 20,000 to 19,000, but BSE small cap goes to 38,000, right? So that is one way. Then there is a ratio, BSE small cap divided by Nifty. It gets closest to 1.9, 2.1, was low chai. See, because Kachra index will remain Kachra index. You cannot compare Nifty small cap 100 because larger companies will outperform. Either perform kiya ho bahar chala jata hai. So now, okay, these two criteria is done. Now this is my playing field. Is this a multi-year high, right? So very simple example, 2005, Sensex crosses 7,000-8,000, right? Nifty crosses 2,000 roughly. You've made a 13-year high. It's a nice cup and handle formation, 2,000 ka top cross over. Great. 2008 happened. You were at 6,300 Nifty, 2,200, 6,300 in 2011, 2014, we crossed 63. It's a fresh 6-year high. Matlab a new trend has started. Now here you don't look at overbought, etc. Ye to teji hai. Everything will look overbought. You have to write. 2017, you have demonetization and you have the best rally across the world. So demonetization in India led to financialization of the whole world. People say teji aaya because financialization in India mein hua, people started putting money in the market. Now, yeah, they put money in South African markets also, Brazilian also, and US also. India hi chala raha hai sab kuch. 2017, none of the markets across the world fell by more than 10% for the whole year. None of the markets. You can pick up any global market. Right? There could be one or two exceptions jahan pe war hua hoga to. Right? So it could not have happened for our demonetization. Right? So the trend starts. So you just participate and hold it on. So multi-year high hai, then you don't look at anything. You just need to be invested, levered, and just remain invested. So now, for example, today we've crossed a new high at 18,600, right? So the fact is 18,600 you have to be invested. People will call it overbought. Same in 2014, you could worry about elections, right? You could worry about AAP, BJP, Congress, etc. Right? But the world has broken out. So today also, the point is let the trend turn. So wo ho gaya. Then you go to chart patterns, right? Then you say what are the best looking stocks. So in a bull market, you can participate everywhere, right? Jo bhi naya high bana raha hai wo. In a sideways market, what do you want to do? So the bull market is easy. Kuch bhi loge chalega. So you see any chart making higher tops and higher bottoms, cup and handles, triangles, you buy. In a sideways market, what do you do? Market is going nowhere. You look at sectors and stocks making new highs. So we go to 2021 end to 2022 start. The only sector which was making 52-week high was capital goods. And it was right from the top to the bottom, right? Even a Bharat Bijli is making new highs. There is a ABB Siemens, various stocks doing highs. So what do? You go there. So you find leadership. You have opening up things making, say you have a Indian Hotels making a 12-year high. So you go there. So sideways market, you look at leadership. Bull market, you look at price, volume, momentum. Kahan pe? Wahan pe jao. Down market, so you only look at getting out. And the fact is, technicals is a representation of the company doing well and investors believing the company doing well, right? So we are not smart people. Technical analysts, we are the dumbest people. You have to believe yourself. Then only you'll be able to do technicals well. Because you're not supposed to ask the question why when you're analyzing. Maybe you've learned fundamentals, then you can ask the question why, right? Why will this break out, right? So if it's a cup and handle pattern, a classical thing is in a cup and handle pattern, the stock should have fallen 20, 30, 40%, right? 100 becomes 60. Now, how many companies actually recover back to come back to 100 when they've fallen 40%? They're less. Now, how many of them can actually cross it? Uska matlab kya hai? Either the company has gone through a cycle, which may be a commodity cycle or a market cycle of fall, or an individual cycle of the company ka kuch problem hua hai. Most companies do not come back out of it, right? Now it breaks out. Now either the company is same or something has changed in the company, that's why it is crossing, or perception has changed. For example, you look at Reliance Industries, a very simple example. 2010 it tops out till 2017 does nothing. But when it breaks out on 2017 February, it is no more just a oil and gas company. It's become Jio, right? So the thing has changed and that is reflecting. So you buy on that day because there's a 10x volume bump up. So you see a nice 6-8 year breakout price volume, you go in. Now you cannot go and understand कि Jio चलेगा नहीं चलेगा क्या होगा. जो fundamental analyst है उनको भी नहीं समझ रहा था. Right? कि Jio is the reason we are talking today much more easily, right? So that is the way you go to chart patterns and volumes. We don't look at indicators. You look at RSI only for divergences. You don't look at otherwise any indicators. Price volumes are the best. And understand when something is breaking out. So when I trade short term as a technical analyst, my profit is an impact cost of an investor. Very simple way to say it, but there's a lot of meaning to it, right? Say for example, a company, I trade most of the times mid caps and small caps on technicals, not just the large caps, right? So if there is a company which is 1,000 crores of market cap, the normal volumes are not even 2-3 crores, 5 crores, 10 crores worth of shares being delivered on a daily basis, right? We don't see 1% of equity getting traded. So if somebody wants to buy 1% of it, the stock is 100 rupees. He's taking a 3-year call. He'll take it up till 120, 125. We see the volumes and price action on 100. So we buy at 100, we sell at 120, 25. So my profit is this guy's impact cost. Who thinks it's a 3-year trade? Right? So that is the logic. So you don't think about कौन ले रहा है? वो 3 साल का ले रहा होगा. हम तो breakout आज ले रहे. We could ride it to 120, 150. Then moment as buying stops, the prices go sideways for some time. They don't fall off sharply. Right? Then the next leg starts. So the fact is, as a short-term trader, so when people say chart में सब कुछ दिखता है, बोला नहीं दिखता है बॉस. चार्ट में कोई कुछ कर रहा है वो दिखता है. कंपनी काम कर रही है, मेहनत कर रही है, अर्निंग्स आ रही है, तो किसी को लग रहा है कि फ्यूचर में चेंज होगा तो बाय कर रहा है. वी आर जस्ट पिगीबैकिंग, राइट? We are in the train just sitting there. Somebody is driving the train. Somebody owns the train. Right? We are just piggybacking. The best part is we can get down anywhere. We have a stop. Right? We have a stop either in terms of stop loss or we have a stop in terms of target. So we can get out anywhere. So you're not the smartest guy. So technically, so this happened multiple times because say, I was also up till 2020, head technical research for an institutional broking outfit. So I used to meet a lot of CIOs, fund managers, right? So I remember a case we were discussing, Hindustan Unilever. So this is my first recommendation when I get into this place in 2012, saying the stock is at 270, it will become 500 rupees. So my say sales guy says, boss, aisa target nahi hota institutional mein. You don't give a 50%, 100% target, right? People will think you're bluffing. The point is, people should also believe what you're saying, right? If you're bluffing, if he thinks you're bluffing and you're meeting him for the first time, so be rational, give a 30% target and then explain the reasons. So the fact is, then the question next comes, why? That is not my job. That is your job. My job is I am seeing a 12-year breakout on Hindustan Unilever and it's done a buyback 6 months back. So company is ready to do a buyback from the companies and the stock, if it has broken a 12-year high, it should not just make a 20% move. It should go up 100% minimum, right? Or logic in technicals is if it's a 10-year breakout, your targets will be done in 30% of the time. So the view is, अगर ये 12 साल का breakout है तो 3-4 साल तक चलेगा. Right? Same way in 2014, BPCL is breaking out. Crude is at $110. So you make this presentation, OMC is fatega. So like, why? Like, I don't know. And till the time it went up 30-40%, crude was still as $110. Right? But then we had this policy in India where you could pass on the rates, deregulation happened. Right? And that happened 6 months later. And then crude prices also fell. Right? So you don't know the answer why. So today, after 10-12 years, my process is if I see a breakout, I try to answer what can be the trigger for this company. Right? So today my framework is what? Look at other alternative things to give me a trigger. Right? For example, one of the trades which did me really well a year and a half back was Z. Dish TV came out with a resolution. The lenders said, we will remove Mr. Chairman from the company. We've done a resolution. So he said, boss, तो फिर ये इसमें हो सकता है तो Z में भी हो सकता है. The stock was available cheap. It started trending up. The stock opened 20% high. Right? So it was just a say a simple this thing. So today, for example, we look at insider trading. The concept is very simple. बेचने के कहीं reason हो सकता है. Selling can have multiple reasons. One, you have a PE. You have to say sell it because it is 8 years old, right? Because you'll not get a carry on it. You cannot charge fees on it. So you'll sell, right? You have a margin call on some other position. You have to sell. The broker is selling your position, right? We have seen promoters selling their companies because they were leveraged. CG Power happened because the promoter was leveraged, right? So selling can be multiple reasons. You are selling X to buy Y, but buying has only one reason. You think it should go up, right? Or you have to be paid as a kickback. वो तो होता नहीं है, right? It could happen in the shadiest of the companies. You intend to make money when you're buying. So we look at insider trading very, very closely. And then we say, okay, अब ये breakout हुआ तो अच्छा है. So same way, somebody understands this sector is going to turn. Somebody says sugar में ठीक हो गया सब कुछ, right? Somebody says tire में because rubber. This is 6-8 months back, right? So then you say breakout हो रहा है तो हाँ ये logic तो भी makes sense. So what do? You look at, so today my process is to look at a lot of alternative fundamental research plus situations which are situational investing, right? So you take a trade randomly, say, boss, Indus Tower जिंदा हो जाएगा अगर idea बच गया तो, right? NTPC Power Grid should do well, for example, because they were available say a year back, year and a half back. First time you're seeing a classical example is ITC. Shareholding in 2013 to 15 when it became the largest say weight in Nifty was 20% plus with FIIs. By the time in December 20 or 21, it was at 10%. So there was no fundamental reason for the stock to go down, right? The reason was 10% of equity was sold by FIs, and we are making memes. And there is one quarter in March 21 where the shareholding goes from 10 to 11. So now do you know what? The real reason for the stock falling down has changed. Fundamentally, तो पहले भी अच्छा था, pre-COVID भी, post-COVID भी. And then the stock doesn't stop. A classical example, we are talking about GQG putting money in Adani. That owns 1.25% of ITC. So the first 5,000 crores he put in India, which was known as an ITC at 260 rupees. Right? So now today, so first you start with your technicals, spend a few years, 2 cycles, then you mix fundamentals, or you can just be a technical analyst. So the fact is, you are doing what? Fundamentals plus technicals, but your core is technicals. At the same time, if I make an investment which is purely on fundamentals, technicals is only to add positions. So you cannot be doing both, otherwise you'll go mental. You have to stick to your core in totality or in terms of that idea also.
Great. Thank you so much for explaining it in detail. And I'm sure everyone in the audience would have got a lot of value out of it. So my next question to you related to this only is, do you keep your investments and trades separate, or you have both of them jumbled together in your portfolio?
So say for example, there's this thing. So I'm majorly an investor with the capital. So 60%, 30 to 60% of the book is an investment, right? And the rest is trading. So the whole leverage part is obviously trading. You cannot be leveraging and investing beyond a point. So the stocks you buy gets pledged to buy derivative positions. So my investment positions are pretty, so they could have 1 to 3 years of holding period. Even in the research services, we have, say for example, if I run a Techno-Funda small cases, there have been positions which have been there for 6, 12, 18 months, right? So the fact is, but if in one of them, the idea is purely on technicals or purely on fundamentals, right? So certain ideas are purely on fundamentals. They will get out if the whole technical structure changes for the company or for the country, right? Okay, if my view changes on the whole markets, then I'll have to scale down irrespective of my view. That is what I've learned over the years, right? So 2018 to 19, for example, my view was because of the flows. So I came out with a presentation in 2017, flows to float. के बॉस 1.5 लाख करोड़ रुपया साल का आने वाला है, तो मार्केट गिरेगा कैसे? Because the largest amount of FI selling in 2008 was 90,000 crores. But then I learned the lesson. LTCG came into place. So index can go up and stocks can keep going down. So say in 2011 to 13, index was sideways and the stocks fell down. But in this case, you went from 10,000 to 11,000 and the small cap index fell by 40-50%. So you learn from that. So the whole thing is from that we learned that things can happen. So today it could be opposite. Index could go sideways and small caps can continue rallying. So stay with the trend. Do not take those assumptions. So that's how it works.
Great. So your basically your investment portfolio you'll keep separate
Holding.
when you start with. Yeah, today you will keep it separate.
I may take a trading position in the same stock. For example, say I have a 15% allocation to a stock, and then I see, so I bought at say 200, the stock makes a new all-time high 270. So I'll buy 270 as a trade, which will be another 5-10% allocation, but that will go off at 350 rupees. But my core position will not move, right? So the fact is, this is my style. And for example, in all the research service or whatever we run, we have a very simple small cases 10 by 10 stocks. In other cases, it is 8% max allocation to a single stock and 12 to 15 stocks. So you have a bunch of stocks where you just hold on to it. If the trend continues, you let it ride. If the things change, you get out. So we are trend followers. The only difference is for me, the advantage is I have this huge hobby or passion for chore companies or misgovernance, right? So I like to see all frauds. So I've written on a fraud like Speak Asia also. I have written on LIC buying into stocks which don't make sense. Now I don't write any negative stuff, right? So there's a tagline called Chor Bane More, right? So I'm the one who came out with it in 2014-15, saying that this is the thing which is changing, right? The companies which I covered, if I had only held on to them from 2012-13, when I saw the change, I would have done much better than all the work I've done till now, right? So some of those companies are 30x, and now they are the best chemical company, the best tire company of India, right? So things change. So chor bane more. So I know one thing which I'm good at. Okay, I know terrible companies. मुझे पता है कि कहाँ नहीं जाना है for sure. I may not be able to get good companies, but I know one thing I've become good at it. कि I know चोर कौन है. Because I've been looking at historical misgovernance in many companies, all the shady things which have happened. So that is where I'm able to do this. What I'm doing right now. Okay, even if you are a little bit off on stop losses, you know you will not lose full capital in a company anymore. Right? You will not get a core projects anymore. Right? You may get a stock which will go down 40-50%, right? But it will not go down 90%. So that's the reason. So see, technically you cannot weed this out. Whatever happens, XYZ software company I'll not buy. Right? So I know, okay, boss, ये receivable तो है ही नहीं, आने ही नहीं वाला है. Right? So if you can cut it down, it removes that risk of total capital loss. See, technically risk here, you've not cut out on a 20% stop loss or a 10% stop loss. The stock can go down to 60-80%. But if your universe of companies are companies which are good companies, they may go down 30-40% even in a coded and recover back. But if you're invested in a shitty company, you'll never recover back for the next 10-12 years. So that is the difference I have in my strategy as a technical analyst. I'm just not participating in the bad companies, irrespective of the technical chart structure. There has to be some change.
Great, great. So if I have to ask you to look back at your career and highlight 2-3 big mistakes which you did and which really helped you further understand this art of trading and investing in the market. So what would be them and how you will talk about them today?
So I'll not go into 2004 because I was too young. That was obviously you'll make your initial mistake. But 2007 is the 2008. One is getting influenced by somebody else and putting all your money into one basket on somebody else. Even if you do it, you can at least say, "Arey yaar, tu ganda kiya, tu kharab kiya." Right? Ye tera mistake hai. Now you can't blame him. And that guy lost his whole savings forever because he did not pick up the phone call for the next 1 year. So never bet on influenced, getting influenced. And even if you get influenced, right? So today I have a respect quota. Right? कि अंकित ने बाय किया तो मैं रिस्पेक्ट में ले लूंगा. But respect cannot be, my portfolio cannot be 60% respect quota. Right? So first thing was that leverage is okay if you lose your own on your own because you learn from it. But here you had no clue कि क्यों हो रहा है, क्या कर रहे हो. So don't go influenced so much that that becomes your portfolio. Lever to the point where you can manage. That was my second learning in 2013. It was just a 5-10% fall. But because I was leveraged heavily, I had to cut positions. So manage your leverage so that you don't lose full capital. And when I cut positions, I knew this is the bottom. But if it would have gone any more, the QE tapering would have taken a lot more. I would never be able to stand back. So that was the learning. Never lever to a point where you can die. Right? So that's how I've survived in the next drawdown in 2018-19 or in 2020. Right? So these were the two major mistakes. And the third one is do not let anybody say over influence you in terms of your style changing. Right? Stick to your style all the time. So all the mistakes happen when you go beyond your style. Say if you're a trend trader. So for example, today my consistent argument with everyone else is, boss, why don't you short? Right? Even when you tell us कि ये short बनता है, why don't you short? Like my mental framework goes off. For example, even if I like R power, right, which I used to like it as 6 rupees, I cannot buy because mental framework, I'm like, yeah, 1% of portfolio hai, but 20% of my day goes looking at that price. So I've understood कि ये मतलब मैं एक पानी पूरी खा सकता हूं, but मैं पानी पूरी challenge नहीं कर सकता. Right? So you do all the stuff which you can digest. So you can binge on various things. So my mentor Kukuji, for example, used to say कि बस मस्ती तो सब में है, right? So trade, so he used to be an investor who used to trade with 2 to 5% of his position, right? तो देख पानी पूरी अपने को भी पता है कि नहीं खाना चाहिए रोज के रोज, तो but we do eat, right? Right. So, but it can be an indulgence. It cannot become the style. So you can indulge in a lot of things, right? So you take a 1% allocation in a company which is new age, etc., SME, right? Crypto lena hai, kuch le liya. Indulge, but don't make it the whole this thing addiction.
Right. So I think that is what separates between a newcomer or someone who is fresh and doesn't understand difference between indulgence and getting over influenced. Because over influence starts with indulgence only. आप स्टार्ट करोगे शायद 1% से ही, और वही क्रिप्टो अगर आपने 1% लिया और वो वहां से जंप हो गया, so that is why I think, and you keep throughout our interview you have kept mentioning about your mentor, and that is, I believe, is very much important, right? To have a good mentor.
So luckily I've had so many mentors, and even today I can keep meeting them. So for example, I say Mama, Kukuji, Vinodori ji, Neeraj Merani, for example. So I've learned a lot from, so when I met Gaurav and Ayush, this was in 2009-10, right? So now they had a time also to indulge and talk, etc., right? So many of them, so you could go meet them, learn. Even today, you meet so many investors. I have a list of 20, 50 people to talk about, right? We've done podcasts also with some of them, right? So over the years, you've met so many people. So mentors are important. And luckily our market is such, people do meet. People do talk. I can tell you about, I have an intern in, just who became in my team. So he went for a CFA program. I'll not take a name of the investor. So he introduced himself. He said, what is your age? 21. He just gave him his personal mobile number. He says, whenever you have a doubt, you can call me. Now he's a veteran of 30 years in the markets. तो ऐसा तो नहीं होता ना कोई भी धंधे में कि बॉस, right? Somebody will say, no connection, nothing, just 1 minute talk. So that's the point. Okay, mentors are available, right? It's not as difficult as it used to be.
Right. So since you mentioned Neeraj Merani, a question which really comes to my mind, I remember attending one of his only webinar, because he's a media shy person and he never comes. In fact, I've been trying to get him on Investing Karwa, and he's been saying no all the time. So he mentioned in one of the CFA webinar where he was I think it happened during the COVID times only, May or June
COVID,
2020.
Yeah, that is the only time he actually came.
Yes. So he made a very good comment there that whenever he has to buy or probably has to sell, he will take your help in terms of technicals. So I would want you to go deeper into that. If I say, for example, I'm a hardcore fundamental investor, and if I come to you and I say that these are the stocks which I'm bullish on, and these are the stocks where I've made a good money, and I want to know whether I should exit or should I hold on. So how do you take these kind of call and help your friends or anyone who would be seeking that kind of an advice?
So I'll start with something which I learned from Neeraj, is the amount of deep work needs to be done. So when I met Neeraj in 2009, Kukuji, Vinodori ji, Gaurav Sood, I remember Gaurav Sood was invested in Ashana. Neeraj was buying Hitachi, Whirlpool, which was the name, right? So the amount of work, then I've seen him do NBCC, right? So then I learned what is actual research, right? Because back in the day when I used to read research reports in 2007, you would laugh at it. Kya hai? Then when I got into institutional, then I learned institutional imperatives. So for example, Neeraj Merani used to write a lot. 2013 became a problem because of SEBI compliances. Otherwise, Ayush used to write this lovely blog called Dalal Street. Value Picker was very active. But that SEBI thing stopped them from writing. Rohit used to write the first blog, Value Investor. So it was all available. They had to stop writing. So now Neeraj does a course at Flame, right? Which I attended the first one in 2018. Harsh, my teammate, attended this year. So that's a nice course this time. Kuntal Bhai is also there doing the course. So it's a 4-day course. So there are people who do these courses, right? Flame is doing so many courses. So you can go for a full day, 4-day course, attend Neeraj talking. You have Rajiv Thakkar doing a course. You have so many people, right? So those things are there. So what happens is in technical. So there are 2-3 reasons people connect with me, the best of the investor. The first one is chor hai ke nahi, right? So that I don't waste time, right? So they know कि इसको पता रहेगा अगर इसने चोरी की है ना कंपनी ने तो इसको शायद से पता होगा, right? So that is the first reason. Second is, what does the market look like? All right, is the structure changed, right? And the third one is asking on technicals on a stock. Now the funny part is there is a very nice statement by Rakesh Jhunjhunwala that technicals allows me to hold my companies. The worst part, most people think technicals will allow me to exit. That is what you started off with. And this is the best investor and the best trader and investor who's been known one saying technicals allows me to hold. There's a YouTube video in Market Wizard series of it. Allows me to hold because things can remain overbought for much longer than you can think, right? So that is where a lot of connect happens. So Neeraj, for example, a very conservative investor, right? So he says, मेरे को एक ही बात समझता है, लेने का, right? So I have control on what I am buying, what is the risk, right? But ऊपर में तो you can do only one side, right? He has a very simple thing. तो ऊपर का तो मेरे control में ही नहीं है. So he'll buy, say XYZ cooker company, then it goes up 3x, 4x, then he sells, and then it goes 10x, right? So that's the thing. So for example, Puneet is there, Puneet Yoran. So the thing is, boss, trend अच्छा है. The point is slowly sell. That's the big thing. And then the second part is bottom out हो गया. See this company you're liking, right? I'm like, charts bottom out हो रहा है. तेरा thesis play out हो रहा है क्या? Then maybe लेता हूँ, right? So that is where it helps. So in terms of thinking of scaling a position up or scaling a position down, investment decision will not happen because of a technical guy telling you, right? It will only be scaling in and scaling out. So I remember saying, I remember for a stock telling Neeraj, boss, देख इसमें ना punting हो रहा है stock में, ये तेरा stock 130 का 200 जाने वाला है, there is something happening, कुछ आ रहा है, तो okay, मैं 200 वाला बेच दे, क्योंकि अभी वापस से कुछ हो रहा है, there is some fund selling, etc. He didn't do anything in both those periods, right? But he understood क्या है, and then the stock became 800 rupees. That's the quality of an investor, to disregard that 130 to 200 to be played and 200 to 160 to be played, right? This is not what I am in for, right? But consider him saying, boss, I have a 10% allocation, I want to go to 1250, so that 130 pay he can take that 2% addition on somebody's analysis. So that's how it works. So even on the institutional side, when you're telling a CIO, CIO is not going to decide even on the head of research's call, his own team's call also, right? You'll see Naren telling, ये सब fund manager ने तो मना किया था, फिर भी मैंने लिया, right? तो कहाँ वो broker के कोई analyst की सुनने आता है? But scaling in and scaling out is where the technical guy actually helps for an investor.
Right. Thank you so much. You again dealt on it in a very detailed manner, because, and I think the biggest takeaway which I took from what you said right now is that you can take anyone's help, you can take anyone's opinion, but ultimately you have to use your own mind and understand your own style. You can't just copy, like if you are someone who use charts and I am someone who is looking at long-term fundamentals, then I can't just be, as you said earlier also, that I can't be just influenced by what you are saying. I have to use what you are saying and put it into my context, which is where people make most of the mistakes.
Right.
So
see,
that was
the advantage
really
could be you can go from 10 to 12. That's the 10 to 14,
exactly.
10 to 50. But 10 cannot be me, right? That's the whole point. That has
Exactly.
to be you.
Right. Great. I think there are a few questions from the audience also. So I'll just see the chat box and I'll start with a few questions from there.
Yeah. So just give me a minute. I'll be back. I'll take a little break. And then till the time the question can go up.
Sure. So by the time Nooresh is back, if anyone has any question, you can just keep typing on the chat box. I'm available. If you have anything to discuss about Mission Smile or have any questions about Mission Smile, you can reach out to us. Harshal would have shared about Mission Smile at the start itself. So anyone has any question related to today's webinar or related to Mission Smile, you can probably ask. I can see a lot of questions, so thank you so much for chipping in your questions. So we'll take all these questions as Nooresh comes back. Yeah, so I'll just go through a few of the questions. Is Nifty Media okay? Yeah, I think option trading is a very good question. Many people are now looking for option trading and all, so we'll take up that question as well. Okay. So Dipankar, you've asked this question, do we need to check fundamental while buying stock as per technical? I would just want to give you this view that, see, it is ultimately your own choice. If you want to be a purely technical person, you need not look at fundamental. Just because I am a fundamental investor, I will not recommend you to just look at fundamentals. It is my style. I am more comfortable with fundamental investing, but I will never suggest anyone who is good at technicals and who is someone who has a bent or a psychology towards technical to necessarily look at fundamental. You may look at fundamental if you want, but nothing is necessary. That is what is the beauty of market. There are so many different styles, and all these styles work for everyone, right? So somebody questioned that, I think Abdut, sir, any plans to bring in more guests like Atulji, investor who have been focused only on? Yeah, we are in talk with several such people, and in fact, in the next month only, you will get someone who has been doing some really good investing in the small and micro cap space, even though he's very young and only 10 years of experience. But I personally learn a lot from him, and I think we all will learn a lot from him. And he has a completely different style compared to what I do. So I'm very excited I'm not announcing the name now because that would be his first public webinar. So we'll inform you once the dates are finalized for the next month. Okay.
Yeah. I think I've lost the video access. I don't know why.
Okay, let me just give it to you. Just give me a moment.
Yeah.
Try now.
Yeah.
But I can't see you.
I think it should take a second. You'll be able to.
Yeah. Okay, great. Just give me a moment. I'll just check. Yeah. Great. So, Nooresh, I'll just read out a few questions from the chat box. So, I'll just go to the first question first. So, this is from Jitendra Singh, how to build psychology and how much important it is. I think you have covered that pretty well. As a beginner, what steps should I follow to make to be a good trader or investor? So maybe you can touch upon the few steps you would want to.
So the first step is read on technicals, read the basic books on fundamentals. You can start with Peter Lynch. That's the simplest and the easiest book. Phil Fisher books, Common Stocks and Common Sense. Then in technicals, read any old book on technicals. Take an online course. There are 10 to 20 people like me. Even NSE has a course, right? So do that. Understand the basic meaning of both the sides. Then you will know what actually you are more liking towards or you have an interest towards. Wherever is the interest, start reading a lot more. Start trading and investing a little, right? Concentrated to start with. So take lesser positions. Capital could be low, take lesser positions, trade. Learn from trial and error. You'll understand yourself in this stage. And then on the side, see to it that your time gets invested into building capital, which is through a job, through a profession, business, whatever. So this can continue on the sides, and over a period of time, you will get the conviction, okay, am I a good trader or an investor, or this is not for me, I should just do mutual funds and I'm good at my job. And that is something which you should be ready to accept.
Thank you, Nooresh. So, Nooresh, can we ask question related to sectors? So somebody
Yeah,
has...
absolutely.
So Saurav asked this question: is Nifty Media starting to outperform Nifty recently? So is it really good for profit before two wrong trades and one correct trade make no profit, no gain? I don't know what he means. He's basically asking
on the Nifty Media sector, the problem is it's two names only, which is Sun TV and Z Media. Both have their issues. Both have done terribly bad. But the rest of the names, the smaller ones, have already broken out. So media stocks which are not looked at, they've already moved up, but interesting chart formation in Jagran and DB Corp. So, and they are the beneficiary of lower paper prices as well as election cycle, etc. The stocks have made multi-month highs. So yes, you are seeing some change in media sector, but you have to remember this is a terrible sector in terms of sticking with the performance. So we've seen a lot of companies get pops, but not get into a major trend. And it's a difficult business in today's world. So technically, it's more like a trade. It's not a trending per se. So this is a place you're always looking at getting out after the entry. You're not looking at riding as easily.
Right. So Achal asked this question on the leverage, which you talked about. When you take leverage and think later, how are you taking leverage on immediate basis? Meaning, is it through pledging of shares or something else?
So there are two ways you can leverage, right? One is you buy equity shares, which is taking loans against shares, right? Or pledging and taking some margin funding from the broker. Second is you do derivatives, right? So for example, consider this case a trade which I've done. So I was very bullish on Power Grid, right? Now the trade is over, so I can talk about it. It's not a recommendation anymore. The stock was there from, been trading from 160, 190. Now, funny part, technically multi-year highs, dividend adjusted basis really done well. So 6 times cash flow, 6% deal was the simple calculation I had on fundamentals. Plus you are getting the whole Power Grid of India. So it's not a business which can be disrupted. Interestingly, FIs went from 26% in 2020 to 32%. Now, in that period of time, 2021, FIs are selling India, but they are buying Power Grid. Now, how many PSU companies you know where FIIs own more than the DIIs, right? The float is 3% for the stock, 50% government of India, so there cannot be any other OFS. So that was one. Second was you have FIs at 32%, 10% with DIIs, another say 12, 15% with DIIs, so 3% float. It was like, so the case is pledge the shares, buy Power Grid. So it was an investment. See, a 20% return in Power Grid or a 30% return may not make a lot of sense as a trader or as an investor, but multiplied by 3x leverage, it's a superb positioning. And you know it will not fall off 20% next day, right? The business is not such that wo Delta Corp jaisa kuch ho jayega, right? And in this case, I got a superb opportunity. There was this rumor, REC being bought. 14,000 crore ka buying kar rahe, 25,000 crore market cap ud gaya. So I scaled up really hard on 190. I said my dividend, sab kuch baith gaya, right? So that's the way you leverage. So you use leverage either by buying shares as last, or you do derivatives, right? Now it could also be a short-term trade. So I do a lot of options also, right? So the fact is now options is much more leverage. Okay, whatever premium you pay. So I do naked longs, right? So I'm buying calls all the time of stocks. Now somebody is doing option selling, which is also a decent thing, but it takes a lot of time and a lot of effort, right? So you've pledged your portfolio, put little more cash, and you're doing option selling. So different ways to leverage, but the leverage is simple. You buy more shares. So a standard leverage which most investors do is you have a 100 rupee portfolio, you take 20% leverage. So you have a 100 rupee portfolio, you're buying 20 rupees more worth of shares, right? Now this 20 can change your thing. Now, so one thing which people think in technicals and fundamentals is exits will decide my alpha, my return. See, because we are fearing that 40% drawdown, 30% drawdown. But the reality is your alpha comes from when you've put money. So I tell my clients as well as friends, कि पैसा कहां डाला है ना, उससे रिटर्न का डिफरेंस है, निकालने से नहीं है. सी, बिकॉज निकाल के you have to put it back again also. Otherwise, you've got the 2015 top right, 2017 top right, markets are down 30%, and you don't put it back, right? The stocks are down 100 से 70 आ गया, फिर 90 पे ही डाला पैसा, तो क्या हुआ? और फिर तुमने पैसा वही स्टॉक में डाला, न्यू सेक्टर में नहीं डाला. But consider this, where you've put the money, right? So you've used 20% leverage more in March 2023, right? Any damn stock is up 25%. Pura alpha change, na? You put 20 rupees and you made 25% on it. That is the real alpha. हम सब लोग 5% ही ज्यादा CAGR बनाने जा रहे हैं ना, right? So when you put the money, so leverage can be used in this way, right? Say you levered in March 20, right? You levered in June 2022 when Russia-Ukraine happened, right? So there are different ways to leverage. The other leverage is a technical leverage where you're buying momentum. Right, you're leveraging it 18,600. The world is saying, boss, overbought it. 18,600 became 20,000. Right, stocks went to much more. So leverage, this is the way you can leverage either equity, derivatives. I say options you should not do because that is something which requires a lot of skill. So the logic is this: the lowest time frame, highest skill requirement. Longest time frame, luck can change everything. See, some investor who luckily bought some Hindustan Unilever in the 1980s and some MNC stocks, he had no clue kya hai, right? I know somebody whose grandfather bought, but he's getting the luck. So on the long-term time frame, 1 out of 100 investments, 99 going to 0, 1 can be up 100x or 200x or 500x, and it could just be luck, right? So smallest time frame requires the highest skill, which people think is the easiest. Day trading seems to be the easy. It is the most difficult skill set you can have. So leverage, 2 ways. I say for most people, 120 is a normal thing which can be digested.
That's a very, very, very good point, Nooresh, you mentioned. So like when you have, as you mentioned, that the smallest, jitna chota ho jata hai tenure, utna your skill set matters more than the luck factor, right?
And mutual funds have given you nice 8 to 12% CAGR, right? Which is 50% higher than the fixed income returns. और Buffett साहब बोल रहे हैं ना 50% AAA पे बनाना है, हमको तो म्यूचुअल फंड ने दे दिया है.
Exactly. So वही है कि and even the data also shows that so many technical as in the short term traders, they lose money.
Absolutely.
But still people think that it is an easy job, and people think that क्योंकि वो तुरंत में पैसा बनता है तो लोगों को खाली वही दिखता है कि पैसा बन रहा है. People don't.
So I say a very nice, no offense to people, but only a day job worker gets the salary on the same day.
Exactly.
नहीं तो सबको एक महीने बाद मिलती है तो. And that job requires a lot of physical, mental skill, right? A day worker is more skilled than us, right?
Obviously.
So, but हमको लगता है ये हलवा है क्योंकि ये हमको अकाउंट में आ जाता है. So that's why I started with saying that not everyone needs to be a trader, and you have to accept that I cannot be a trader.
Right. Okay, I'll move on to the next question. So after buying for 1 to 2 years horizon, what will be the ideal stop loss? And do you think आप जिस समय खरीदते हो तब आप क्या ऐसा सोचते हो कि मैं 2-3 साल तक रखूंगा? I'm not sure about that.
So see, an investment made, you can do it. Or for example, you've taken a 10-year breakout, right? Say you buy Indian Hotels 10-year high at 160 rupees. You say, I'll keep it for 2 years. But you buy a short-term breakout and then it develops into a long-term breakout, then it keeps on going. So the stop loss, which I say is the most important stop loss, is the portfolio stop loss, right? Okay, as a portfolio, when do you want to go to cash? When do you want to stop putting money into the markets? See, all of us are cash flow guys, right? कोई salary बना रहा है, कोई पैसा बना रहा है और डालते ही जा रहा है. So हम cash flow कब डालते हैं उस पर. See, if you're a full-time trader, then this does not come into picture, cash flow, etc. But like I said, everyone is looking at the exit. But अगर March 23 में पैसा डाल दिया, right? फिर stop loss का कुछ फर्क ही नहीं पड़ता, right? So you have a long position. You did not get stopped out only. See, none of the stocks really fell 10-15%. सब one way हो गया है. So
Exactly.
the stop loss in a 1 to 2 year is a higher top, higher bottom formation becomes a lower top, lower bottom formation. All right. Say for example, you have this rally in pharma in 2012 to 15. Then Sun Pharma goes from 1100 to 900, then 1000 to 800. So अब समझ गया ना दो bottom पे के अब तो trend change हो गया. So use classical Dow theory principles if you are holding positions for 1 to 2 years, right? Same way, fundamentally, either it becomes overvalued or the sector changes, something goes off on the way down. So technically, the fact is it's not a percentage based stop loss and also a time stop loss. Was see if you've done really well on a stock or the stock has done nothing for the next 3 months. You intended to hold for 3 months. So you take it off. So, and you have an alternative choice all the time. I think Ankit went off. I'll just see if there are any other questions out here. Where was he? Nifty Media. What should be? I'll take the questions till the time Ankit comes back. All right. So the next question I see is what should be an ideal stock mix in terms of number to avoid diversification? So I say a very simple concept here is what is diversification? So if you cannot remember the number of stocks, it is definitely over diversified. So we did a test with a lot of people. Most people cannot remember more than 50 stocks. So if somebody has a 50 stock portfolio, he will say he has 52 stocks or 48 stocks. He will never be able to say all the 50 stocks. So the ideal diversification is between 12 to 25 stocks. But then you go to weightage. If you have one single stock at 40%, for diversification to why nahi? So my view is most people cannot remember more than 25, 30 stocks easily. And 50 ke upar to impossible hai. I can bet 90% of the people will not be able to remember those 50. And 100% of them will not be able to remember the allocations done even at the start. So do you think fundamentals will be overweight as compared to technicals? So the fact is fundamentals are the reason companies are going up most of the times, or perception of the investors on the fundamentals of the company or on the future of the company or just speculation, whatever be it. As technicals, we are just trying to understand what the market is saying and use it. So technicals are not weights. We are just participants. Somebody else is driving the train. Somebody else owns the train. So see, owner of the train is the promoter of the company. The drivers are the investors, operators, speculators, whatever you want to call, whatever you want to do, institutions, ETFs, etc. So technicals is just understanding the market to get the best probabilities in place. So the weight always has to be company, the country. So the first weight starts with the country. So for example, you cannot be in a terrible country where inflation is going up 200% on a daily basis and expect equity markets to do well. Next is, will you show any charts on fundamental slides? So not really. That's not the purpose of the session. It's more a one-to-one talk. How to take exit using technicals? So like I said, one of the major exits is the market exit is on divergence on BSE small cap with the Nifty. Second is stop losses. A simple stop loss for most people is either the 20-day moving average or the 50-day moving average, or you can keep a lower top, lower bottom formation. So the major swing lows break, you get out. Add to the position, new 52-week highs, new all-time highs. Volumes keep on increasing on the breakout. So you start with a breakout at 100, you see huge volumes have come up. You buy at 104 also. Then the trend has developed really well. It's a 10-year breakout. Then you see first move has happened. Then there is a consolidation. Then there is the next breakout. So you add more at 130. So you add on the position when the trend keeps getting confirmed. What is your view on option trading? Like I said, it requires a lot more skill, whether even you're an option seller, option buyer, not as easy as it seems. And if you're doing naked strategies, unlimited risk, you can lose 30, 40, 50% of the capital before you can realize. Your view for Nifty in the upcoming days. So till the time the trend does not change, the view does not change. So it starts making lower tops, the view will change. Or you see Nifty making lower tops, small caps making higher tops. So Ankit, I think you got disconnected.
Yeah, there was some internet issue, so I'm back now.
I've taken some questions, a couple of questions till then.
Great. Thank you so much.
So there is one question. The last question I took it from Kuldeep Mishra. Your view on Nifty in coming days. So the answer is simple.
Okay.
Till the time it is higher tops and higher bottoms, the view remains same. The market has to do something untoward for the view to change, or there has to be a huge divergence in small caps.
Yeah. Before we move on to the next question, I have another question. So you were mentioning about that March 2023 में लेने से सब कुछ everything has gone up in the last 2-3 months. So as a technical trader, how do you spot those kind of potential in times like March 2023? What was your screen telling you, and how did you ended up buying at that?
So I'll give you two simple examples of the two absolutely super timings we got, and the concept was much more simpler. So if you look at March 23, right? So the markets had fallen to 16,800. But if you look at the small cap index, the return was 0 for the last 5 years for the Nifty small cap 100, as well as the BSE small cap from 2018 was 30-40% up. So it's not even a fixed income return, right? Secondly, the markets had already, the small caps had corrected well enough. So the small caps were at say 15,800 to 16,400. So the risk reward was in place. Now what happens is the problem is when that selling happens, people see lower bottoms are being made, right? But the global structure is okay. Our technical structure is okay. So the risk reward was in place. So from here, you know that there can be a 10-15% downside, which can be digested as an investor. So that is the time you want to put fresh money. So the logic was very simple. And there was some bit of March end base always selling at times, which happens. So you can go back to March 2016 also. There was a similar structure. Budget was done. There was the time LTCG rumor was there, but LTCG did not come. Rumor had come. The stocks had index was at 7,000, 6,800, 7,000. The world had already bounced up 10, say by Feb 28th when it bottomed out. The world had already bounced back 5%. So you were just waiting for a budget to get over. So that was the case. Then in June 2022, Bank Nifty was available at 32,500 to 33,000. So we said banks being 35% of the index, agar yahan se niche jana hai, so everyone wanted 12,000 to 14,000, right? Now that cannot happen without banks falling, but banks were already at 12,000 equivalent. How? Pre-COVID, the Nifty was 12,000, 12,400. Bank Nifty was 32,400. So up till COVID, banks were always outperformers because of the nature of the business. Because of COVID, they took a hit and they were available at pre-COVID prices. So if the Nifty has to go to 12,000, 14,000 equivalent, you put the weights, then banks have to go to 10,000 equivalent, which does not make sense. See what happened. COVID hit, commonsensical things happened. COVID hua. First, FMCG went up thinking ke sab hoarding karenge. Then pharma went up. Then IT went up because travel costs reduced. Then digitization started, right? So commonsensical things started happening. 2021, you can see the top of COVID cases in Bombay and the top of Metropolis, as well as Dr. Lal Path. It coincides the same week. From there, the markets fell. So markets are 6 months ahead, 3 months ahead, right? So ab uske baad opening up themes happened. The world opened up first. Marriott made a new high. Then our hotel stocks made a new high. Same way, agar banks were the cases where they were the most hit, and now all the waves are over in July 2022. We are not June 2020. We are not worried about COVID anymore. So banks is the best place, and you are getting it at 12,000 Nifty. So my my report was titled "Future of Nifty: Banking on Banks." Right. So banks, and the reason it was being sold because FIs were selling, and they are the largest owners of banks. So Axis Bank was available at the same price as it was in 2018 to 20. You had a lot of companies available at the same prices from 2018 also. The large cap banks. Even today, after the move, IndusInd is available at the same COVID prices, right? Because it's the one which took a larger hit. So the fact was, boss, this was the calculation, basic commonsensical. Okay, banks got hit because of COVID. COVID is over. Banks are still available at pre-COVID prices. So that was the concept. Same way in March 23, small caps have fallen the correction you need. Index has not, because index mein rotations ho rahe. Some stocks are taking weight. So people get so bogged down with the index, they forget. Okay, boss, yeah. So same way in 2020 November, technically, Nifty has crossed 12,400, an all-time high. Small caps are down 30-40% from an all-time high. तो आपका सेंस कहां बनता है कि इतना तो catch up बाकी है to normalize. So he said, don't look at index, look at stocks. So see, technical should be used to understand what the market is saying rather than just only trading. And the problem is, because technicals has been used only for people to get trading calls, they've not understood the whole logic on the whole analysis. So the way we look at sectors, right? See, when a sector does well, every stock does well. So getting the sector right technically is the classical advantage. Volumes is the classical advantage in India. क्योंकि सब illiquid है. लेने वाले का तो एक ही रूल है, like I said. तो volumes अगर कोई 10% ऊपर करके ले रहा है तो उसका तो रूल वही है कि there is a con call of Heg in 2017 or something where they were buying the stock from the open market. Somebody asked him this question. So he said, मेरा भी reason वही है जो आपका होता है लेने का.
Thank you so much, Nooresh, for such a wonderful session today. And even though I have always been a fundamental investor, but I really enjoyed learning about the way you think as a technical trader and how you. So the biggest takeaway from me for me in today's session was that how you said that trading is not for everyone. You have to first understand whether you belong to this place or not, and spend time and understand whether what kind of style suits you and not. So thank you so much for spending time with us. And I'm sure all the audience have got a lot of this thing from you. So now over to you for just last closing comment and any advice you would like to give to all of us here.
So thanks for having me here, and sorry for the audience. We had some issues all through, and this is a standard problem online. So sorry for that. To sum it up, so like I say, technicals is say trading may not be for everyone. Investing also, for example, for somebody who has a tough profession, he'll be better off by just using mutual fund instead of direct investing. So you have to find what fits you and work around it. In the end, you have to compound capital or compound mental capital. You arbitrage your mental capital either for a salary or a business. So in the end, it's always a arbitrage. So the way I say it, for a guy who wants to get into technical analysis, start with the basics, learn from a couple of books, take up any of the older books, and then start off with reading a lot of blogs. I have a lot of things. I have actually a resource for all the available best derivative blogs and investment blogs, trading blogs on the website. So you can go through it, read the basic books on technicals, pick up one book on fundamentals, starting with Peter Lynch, find what you like. And initially, if you're starting in your youth, you can compound your earnings faster than you can compound capital. But you can compound your mental capital in that period by learning about technicals, learning about fundamentals. And then eventually you'll find your way, what you want to do. So first, compound your mental capital, build capital, then learn how to risk and the capacity to lose. And finally, you learn from various people. There are so many people on social media. There are mentors who will help you for nothing. Then finally, you make a peer set of close friends whom you can discuss with. So for me, it works. I speak to I can pick up a call and speak to some mentors. May not be often, but once in 6 months, that can clear your head. And second, I have a close group of people whom I can always discuss ideas, brainstorm. So that's the best way to perform in the markets. So use technical analysis to get I'll sum it up with this part. The industry will tell you timing the market is not important. Time in the market is important. That is something which actually sells the products. Because if you let people time, then you cannot get a consistent monthly SIP, right? And timing in the market does not mean you are timing with 100% of the capital. Theoretically, it becomes 100% of capital. Timing can be used in two ways. One, yeah. So to sum it up, timing in the market can be for two things. One is additional capital. Say putting additional capital in March 20 can change the game, or in March 23 can change your this thing. So you can always time the markets on technicals with 10 to 20, 30% of your cash flow. In the same way, when you get a divergence in a big way, you can pull out 10% cash. And that is the real alpha. The alpha comes from timing. So see, if you bought in 2008 January, for the next 12 years, you will not be able to outperform. So use technicals as an advantage. People can use it for investment decisions in terms of asset allocation. For sectoral allocation, traders can use it for short term. Traders can use it for medium term. Understanding the markets using technicals can be used on various time frames. Find what suits your temperament.
Thank you.
I think you're on mute.
Thank you so much, Nooresh. That was really, really helpful. And with this, we come to the end of the session. Thank you so much, all the audience, for being so patient and bearing with all the internet and connection issues which we have. I really apologize for that. But hopefully, when you see the recording, we'll iron out all the problems and you will have a very good experience. So thank you so much, everyone.